Hey everyone, in today's video we're going to dive into the top 10 things to know about Bitcoin tax and accounting for businesses. I'm Matt Agee, the founder of O21 Solutions, an independent Bitcoin consultancy focused on accelerating corporate adoption. And with me is Jordan Guess, the owner of Trusted Advisor CPA and co-founder of Bitment. Jordan, welcome.
Hey, good to see you. Thanks for having me on. Always excited to get to speak to a new audience and try to make this as fun and as painless as possible. But to your point, before we hopped on, it's very necessary. People need to understand it all so that they don't fall into any of the common pitfalls. So looking forward to the conversation.
Absolutely. So this video is intended to provide a high-level overview of tax and accounting treatment for Bitcoin and address the top questions that business owners should consider as they explore a Bitcoin strategy. So let's dive in. Before we get started, though, I'm going to read this quick disclaimer that nothing in this video constitutes tax, accounting, legal, financial, or investment advice. The information provided is for general educational and informational purposes only and is based on U.S. tax rules as understood at the time of recording. Tax laws change frequently and vary by jurisdiction. The statements and opinions expressed in this video are those of the speakers and do not create any professional client relationship, nor do they form any agreement, representation, or warranty. Always consult a qualified tax professional, accountant, or legal advisor for advice tailored to your specific situation and jurisdiction before making any decisions. All right, geez, let's go.
Cool.
So I wanted to start with a real quick level set on Bitcoin itself and start with the fact that Bitcoin is multiple things all at once and greater than all combined, in my opinion. Some call it digital capital, others call it digital real estate, digital gold, digital cash. And the truth is that Bitcoin can be all of these things at the same time. With a network that runs 24/7 in a decentralized manner on decentralized infrastructure with no central authority, it's technology with an immutable blockchain ledger that's cryptographically secured. It produces an asset, a native token, Bitcoin, that's a fixed 21 million supply and inflation-resistant store of value. And it's, of course, it's money, global, permissionless capital and currency. So what does that mean for businesses? Your ability to take advantage of Bitcoin and integrate it into your operations is really only limited by your imagination. And there are multiple ways that businesses can leverage Bitcoin. And before deciding upon your strategy, understanding the tax and accounting implications is really essential. You could, for example, be a dedicated Bitcoin miner or an energy company looking to optimize energy usage or Bitcoin's secondary uses like waste heat, for example. You could accept payments in Bitcoin or pay your employees in Bitcoin to promote a circular economy. Or you could buy and hold Bitcoin on your balance sheet for long-term savings. So as you consider how this looks for your business, how you choose to integrate it in all of these different ways, we should consider the tax and accounting implications. So with that, I want to dive into the top 10 questions on tax and accounting for Bitcoin. So Jordan, although philosophically I said Bitcoin's multiple things, to the government it's a certain classification of asset. So how should my business account for and report Bitcoin holdings on financial statements and tax returns?
Yeah. So back in 2014, the IRS came out and said that Bitcoin needs to be treated as property. And so you hold it as a asset on the balance sheet. And then for different businesses, depending on the scope of their, do they need to go through audits, or are they a smaller company? It's a little bit more Wild West in how they're accounting for different things. The rules have gone through some changes on, do you market to market every period? Do you do it if it's only on the downside? Do you do it on the upside and the downside? So all that to say, where we sit today, generally how I see it done at this point is you hold it on the balance sheet at the cost that you received it at, and then you have an adjustment account essentially that shows the unrealized gain or loss on that holding, and you can adjust that up or down each quarter, each month. Generally is how I see it done. So that's the main piece, is that you receive it, you buy it, you mine it, however you acquired that Bitcoin, that sits on the balance sheet, and then you can adjust it up or down. And then of course, as I'm sure we'll get into, if it leaves the wallet, is that a taxable event? Is that a transfer from one wallet to the next? Then we're going to have to get into, all right, now we're pulling in realized gain or loss, and how do we treat that on the P&L balance sheet?
All right, yeah, we'll definitely get there. Okay, great. Next question. If my business accepts Bitcoin as payment for goods or services, how is that treated?
Yeah, so we're seeing, we'd love to see as many businesses as possible accept Bitcoin and keep it as Bitcoin in cold storage for safekeeping. If that's the case, we'll start with that scenario. You need to essentially, from a P&L balance sheet standpoint, you need to record the Bitcoin, coming in, and that increases your balance sheet and increases your revenue. So that's kind of all of the accounting side of the equation. Now you also have to, in that case, for future tax information, you need to record the cost basis, which is essentially, hey, this is the USD equivalent for the Bitcoin when I received it at that moment. And there's some different ways to measure that. Our software that we have, it measures every 15 minutes to get the price conversion. Some people use, an average, the daily average. Some people use into-day close. So not really great guidance, honestly, from the IRS on the exact methodology that they prefer. And just speaks to the fact that we're early and we're still ironing some of these things out. On the Bitcoin to dollars immediate conversion, which is what I think a lot of folks in the Square community are kind of, the ones that are dipping their toe in. Maybe customers are asking, hey, will you accept Bitcoin? That would make me want to come shop at your store more often, or come get coffee at your shop more often. I think the step one is just turn on the feature and auto convert it to fiat. The stance we've taken at our firm is that doesn't add any complexity. That is just you essentially just receive dollars. And so we'll see how that potentially evolves. And this is a ever evolving industry, and we're having to keep an eye on, what notices are coming out from the IRS to give us any clarification. For better, for worse, probably for better, the IRS is pretty neutered at this point. And so last I checked, there's no definitive notice saying, okay, you receive Bitcoin and then it immediately converts to dollars that you need to do any kind of reporting. But to the disclaimer earlier, of course, always check with with your own professional, because across, there's CPAs who, some are extremely conservative, and they might take the stance, well, you did receive Bitcoin and then it did get converted to dollars. And even though there's no, gain or loss, you still want to put this potentially on a 8949 form to the IRS. Again, our stance at this point is that that's overburdensome. And we would just say, just treat it like any other cash transaction.
Quick follow-up, just to actually a reverse scenario, because I visited, for example, PubKey in New York, bought a beer using the Lightning Network, but I did the opposite. I paid with Strike, or I think you could use Cash App, but I basically paid with dollars from my checking account and converted it over the air through Strike's system into Bitcoin and paid with Lightning. So I'm paying with cash, they're receiving Bitcoin. So just what's your take on that scenario for the business?
Okay, for the business, it's just the same as like the previous slide, where now inside their Lightning wallet or inside their on-chain wallet, they are just needing to mark that at the cost basis they received for both revenue purposes as well as for the cost basis set for those UTXOs. But like from your standpoint, there's no burden on you to report that. Whereas, everyone, and I know everyone does do this, when you spend Bitcoin, even if you're at PubKey or down in El Salvador, you always report that as a taxable transaction and record the gain or loss, whether it's very minute or not. So I know everyone does that, but you wouldn't have to do that if you're paying cash.
Next question. So then if my business holds Bitcoin as a treasury asset, When do capital gains or losses apply?
Yeah, with how the law is written currently, and hopefully we never see the day of an unrealized gain tax. Today, you're not taxed on anything until you actually dispose of the property. So you sell it or you send it to a contractor or to an outside party. Those would trigger a realization event on the Bitcoin, and that's when you would need to calculate a gain or loss against the original cost basis, either a lot or a group of lots of tax lots, and use that cost basis information to calculate that gain or loss. And then the last thing, as you've got on the slide, you would have to also, depending upon what lots you end up pointing to as the other side of the subtraction problem, that will drive whether it is a short-term or long-term gain or loss. And there are different tax treatments for those, which you might be hearing this and maybe you're a seasoned investor. I should just point out, like, Bitcoin doesn't have specifically special rules. It fits very well into, like, you bought Apple stock, you sold Apple stock, you held it for a year, you held it for 10 months. All the same rules apply. What's unique, I would say, about Bitcoin, and one of the problems we've tried to solve at our firm, is that the reporting is not done for you like it is at Schwab or Fidelity, right? Or if you transfer from one brokerage to the next. Generally speaking, that cost basis data, and it's supposed to get transferred over so that if you need to go sell, they have all that information. They can produce the 1099Bs and all those things. So really where it comes down, and I think we'll get to it a little bit later on, just want to call it out here, is like the main differentiator here is, like, obviously Bitcoin's a much better asset than a lot of other assets. But also there's no central reporting, right? The burden right now to do this right is on the business owner, and ultimately really on their accounting teams or outsourced CFO. So just want to kind of call that out, that if you're hearing what I'm saying, you're like, oh, that just sounds like my normal brokerage account. That's because it really is. So
Yeah. Yeah, and really important to keep track of that cost basis when you receive your Bitcoin so that you have all the information to make these calculations in the future if you need to dispose for whatever reason. Okay, what are the tax implications if my business pays employees or contractors in Bitcoin?
yeah, so kind of a similar situation here where you're sending that Bitcoin out. Again, you're wanting to track the exact lot or lots that you're sending out to that contractor and employee. That's used to then again calculate a gain or loss, short-term, long-term. And then you're that on the recipient side. Now they're kind of in that same, everyone has this like dilemma or burden of, okay, well, now I received income as a contractor and now I have to track that as revenue and as cost basis. And there's tools out there to do that. There's obviously people use spreadsheets or whatever it might be, but it duplicates kind of the data entry. If you've ever been a contractor before, you have to track, like, okay, here's all my income in USD denominated values and here's my expenses. Now you're having to do that plus this whole cost basis and taxable event side. And then on the payroll, like for employees, it's quite hairy there. I honestly don't see that a whole lot. I guess in theory, if I were to see it, it would be business pays out. Let's make it even more fun. They're paying a mix between Bitcoin and dollars to an employee. It hits their P&L as one, dollar denominated expense. And then same with the payroll expense, that would be dollar denominated. And then again, you'd have to have the Bitcoin piece of that transaction in the accounting software would need to be marked as taxable disposition, and it would need to be, have those lots attached to it for a gain loss calculation. So you could be paying an employee, paying the payroll tax, and then you're also having to realize a capital gain because of the lots that were used in the calculation.
Yeah. Okay. What if my business mines Bitcoin? Is that ordinary income, and can I deduct expenses?
Yes. So, yeah, for most people, at least the ones that I see that get into mining and want to, leverage mining for the potential tax benefits, yes, they want to treat the Bitcoin mined as ordinary income, not as passive income, especially after the law changed last year. That happened in July, the big beautiful bill. So yeah, I would say across the board, I almost always see Bitcoin mining income being treated as active ordinary income, and then yeah, you can deduct expenses in that venture. So I mean, the most obvious one is like your electricity, but then also you've got capital that you had to inject in order to get the operation up and running, and that normally takes the place of, or it takes the form of the actual ASICs that you need to buy, potentially building out a site to enclose those ASICs, maybe next to a flare gas site, something like that. And then it's just like any other business, right? I mean, if you need to pay for a software or you need to travel to the site, you can document all those things. And again, I would just tell people, work with your accountant on getting all of those things tracked. But yeah, even going to conferences and networking with folks and finding new customers, or there's a good argument to be made, I would say, for all of those things. And then I do always tell people, if you're starting a business and you're kind of thinking through, like, does this count, does it not? Just bring that to your accountant, and they can always tell you, like, here's how, that's a home run, like there's no issue with that, or that's way too far, we can't be that aggressive, or here's some gray area things, and we can document why we either did take it as a deduction or did not. So
Yep. So for miners, then, upon receipt, like mining a block, then it's very similar to what we've already talked about, where you're recording the cost basis at fair market value, and that's treated as income. And then if and when they sell later, subject to capital gains or losses.
yep, yeah, sorry, yeah, good clarification. Yeah, that does work the same. One thing that I do want to call out is, we've gotten a good amount of inbound this year and last year because of the bill passed. But your note here about the self-employment taxes is important, and I do want to just spend 30 seconds on it. So year one for a lot of these folks who are getting in looks really good, especially if they want to take the full 100% bonus depreciation. They qualify for active participation. If you don't know what any of this means, like, feel free to reach out to me on email. The first year looks really good. If you meet those qualifications, you could generate a loss. You could potentially have that loss offset other income. But what I want to have people, we're Bitcoiners, right? So we think long term. Think about year 2, 3, 4, 5. Right? The ASIC is still in good shape. It's still efficient and all of those things. But now you've got income, ordinary income, and maybe you don't have enough expense to really actually get that number, to get the net income for the taxable calculation, to get that down. Well, now you've got income taxes to worry about, as well as self-employment taxes, and that's just like the employee side of Social Security tax and Medicare tax. It comes out to be about 15%. It's a fun little calculation, but that's generally on top of your income tax calculation. So they're different taxes. So all that to say, I always just try to have the conversation with folks of like, yeah, year one looks good, but Uncle Sam normally gets his way, kind of thing. So make sure that you're just understanding potentially a timing difference in when the taxes are being paid, or have a plan, like a multi-year plan, to deploy into mining equipment so that you can actually have some rolling bonus depreciation to offset income. So,
All right, next one. So how do I determine cost basis and calculate gains or losses for Bitcoin transactions in my business? Already covered this, but let's close it up.
yeah, I mean, it's much easier to explain it than if you get into the weeds, especially someone who's been around for a little while and they've purchased here. Maybe they've purchased at Swan, they've purchased at Strike or River, or Coinbase or Gemini, like all the different places, right? Or they've mined Bitcoin at different pools, and it's pointed to different on-chain wallets, and they've consolidated maybe to an unchained vault. Like, it's just like, and then all the tools in the middle, right? Because a lot of Bitcoiners, I'm sure you experience this too. You want to try out the new wallet and test it with a small amount of sats and kind of see what's up and if it's a good UX. So all that to say, it's a little or it's a lot complicated, and so we're actually working with a lot of clients now to really help them get their cost basis schedule in order, so that they want to take a loan against some Bitcoin, they want to donate some Bitcoin, they want to sell some Bitcoin. We can with precision pinpoint which lot or tax lots, multiple, that we're actually going to pull into that transaction to be most tax efficient. If they want to donate Bitcoin, okay, we're gonna donate the 2013 Bitcoin, not the 2025 fourth quarter Bitcoin. So yeah, the gains or loss, I mean, it's a very simple, like, okay, the USD value, the proceeds basically that you got when you parted with that Bitcoin and triggered a taxable event, minus the cost basis associated with it, again, for the lots that you use. And yeah, you can use, there's generally like FIFO, first in, first out. That's actually the default. This is where a lot of people are going to run into trouble, is like, that is what all the exchanges are using as the default when they send out these new forms, the 1099 DA forms. I don't know if we're going to get to that, but that just it's a new thing this year. And so FIFO is basically the default, and you can use another method called specific identification, and you've probably heard like last in, first out. That's an iteration of that, as well as highest in, first out. But if you're going to use an alternative, like a specific identification cost basis method, you have to have the documentation to back that up. Otherwise, you're kind of forced into this FIFO, which is, you can kind of do the math in your head. Like FIFO is generally the least tax efficient, just because it's the oldest coin that you're needing to sell off first. So all I'd say, we've been working on this for like 2 years at Bitment. You can go and plug in your wallets, you can pull in CSV files, you can connect your exchanges and all this stuff, and then you can pull all those transactions in. That builds out your cost basis schedule, and then you can point that to the different taxable events. And I would just say it's a hard problem to solve. I mean, most of the clients, even if they're like, oh, I'll play around with the software, we've tried to build the UX as best we can, but like at the end of the day, most clients come back and they're like, I just need you guys to own this for me on the tax firm side, and so I'll give you all the data you need. You go in, you leverage the software, you build out my cost basis schedule and produce the reports for me. So,
yeah. All right. Speaking of forms, are there special reporting requirements or forms for businesses dealing with Bitcoin?
Yeah, I mean, you got it down here, the question where they ask, did you sell, receive? Basically, did you think about Bitcoin at any point during the year? Not really, but yeah, it asks like a specific question that you have to mark yes or no on the different tax forms to say basically, did you interact with the network? And that really, it applies to all digital assets, not just Bitcoin. So there's that piece. And then, yeah, I mean, the only other like special reporting piece that just came out was that 1099 DA for digital assets. People were probably seeing those. Yeah, people were probably seeing those in the mail or getting produced on their like dashboard now. I would take a close look at those. I wouldn't take those as gospel. The proceeds are almost certainly right, that column. The cost basis column, that's where I would like be very critical. Some of those aren't going to have any cost basis. And it's not River's fault or, one of the exchange's faults if you didn't give them any cost basis data. They can't just like make up the numbers. But even if they, you did some buying on River, you sold on River, that's just one piece of the picture. And that one exchange just has one piece of the puzzle, but we need like an all-encompassing view of all the buys for the entire history and the sells, and that could be happening on multiple different platforms. So
Yeah.
that the 1099 DA, that's like the main one that's like special. The other ones, yeah, these 8949 Schedule D, that's what like a crypto tax or Bitman would software would push out for you to give to your CPA. And then on the income reporting, yeah, you might, yeah, I mean, in theory, you should be getting a 1099 NEC. If someone paid you in Bitcoin, that should be dollar denominated. And then, again, if you got paid on a W-2, like you got a cool employer paying you in Bitcoin, and yeah, that would just come through on a W-2. So I think those are the main ones. But as a lot of Bitcoiners know, there's a lot of self-reporting as well that you just have to cobble pieces together and push that into your tax return.
Can my business deduct losses from Bitcoin price drops?
Yeah, generally speaking, it's a capital loss. It's also then put into the short-term, long-term bucket, and then it gets net. You net that with capital gains. So this again is like you're selling property. So it's a different income bucket than the ordinary income. But yes, generally speaking, you'd first offset gains, capital gains with capital losses, and then the excess. This really depends on your business type. But like if you just take like a normal 1040 that's got a Schedule C business, you net all of your capital gains losses, Bitcoin or otherwise. So that could be real estate sales, that could be stock sales. And then you net those, you're maxed out at $3,000 capital loss per year that you can use to take against other income, like other ordinary income. So that's kind of the main. And then if it's more than 3K, you can just roll that into future tax years. It carries forward. Yeah.
Bonus question for you. Okay, so if I bought Bitcoin at 126K and then I go and sell it at 67K and buy it right back, is that something that people can do?
Yeah, I would say. So generally speaking, there's a couple frames to look at this from. The IRS, like if you just go look at the IRC code 1091 and you see what asset classes are covered under the wash sale rules, you will not see digital assets listed there. You won't see Bitcoin or anything like that, and no cryptocurrencies are listed there specifically, right? Like stocks are listed there, bonds, options, to name a few. So it's one of those like technically yes, but then the other lens or frame to look at this is the IRS also looks at things as like, well, what was your intent? And so like was your intent to just like blatantly just reset your cost basis, capture a loss, get right back into the asset? Some of the discourse I've seen among highly respected professionals in the space would be you have to do it the right way is how I would say it. Like technically yes, but you want to make sure that you document it correctly, and there's some pretty specific ways that you can do it that's like makes it where there's kind of no way to fight it. So yeah, I would just say I guess work with a professional to do that the right way. Because the worst case is you think you're going to capture this big loss. Maybe that means you're going to exit another position that has an embedded gain. You want to offset those two. And then the IRS comes in and wants to disallow the loss.
Yeah.
So, yeah.
Okay. All right. All right. What are the biggest compliance risks or common mistakes businesses make with Bitcoin taxes?
Yeah, it's really just like not getting ahead of the reporting. Kind of thinking, oh, I'm just going to start out. I'm starting out slow. I'm buying every week or something like that, and then they just don't set things up. And it's not specific to Bitcoin. I mean, small businesses like that come across the board. So I would just say get ahead of it early. Don't let it grow into this monster that's like, oh, now it's an issue. Now we're going to have to go back 2 years to build out the cost basis schedule, clean up your books, and that's expensive, right? And so I would say just get on the reporting, the record keeping early, Uh, and then the only other thing I would say is, you know, AI is definitely very capable. There's like two big call outs I would say if someone was like, "Hey, I'm going to DIY this." The very first one is like from a pure privacy standpoint, you probably should not hand over all of your Bitcoin transaction data to a cloud LLM. Just not a good idea, in my opinion, from a privacy standpoint. Then the second piece is that it's just one of those things where division of labor comes into play quite a bit. Of like, one, do you want to spend the time to be prompting an AI that you gave over all your sensitive data over to already to see if it can build you your cost basis schedule and do your tax reporting for you? Do you want to spend the time for that? And then from a liability standpoint, like if you produce something with Claude or something like that, and you then give that over to TurboTax, and okay, you try to file your taxes. For high net worth folks, it's like the trade off is just like there's an imbalance, right? They would rather have the liability live with the CPA firm as well as the time, and just pay the professional and get everything done correctly, and have the legitimate records to back up any request that the IRS might make. So,
All right. So lastly, I just wanted to kind of summarize, and this is a flow chart from our good friends over at River on Bitcoin tax overview. And I think really in summary, kind of the two things that we talked about most today are, if you wanted to understand your tax implications, is did you sell any Bitcoin, and did you earn or receive any Bitcoin? And largely, you can follow the flow chart into if I earned it or received it via mining or any other way, it's tracking your cost basis at fair market value, and then treating that typically as income, right, when it comes to the tax purposes there. And then the second question is, if you ever disposed of that later, did you sell it? Then you follow that line. Was it you're subject to capital gains or losses depending on your cost basis? And those are really the two main pathways. Am I missing anything there, Jordan, as far as just a quick summary or recap?
no, I think that's good. I think the only other thing I would add maybe to that top bucket, did you sell any Bitcoin? I would say also, did you send any Bitcoin? And then the last one, did you like swap or trade any Bitcoin? As much as I'd love to think that Bitcoiners are very pure and a lot of Bitcoin only, it's not always that way. And so if you do go from one token to the next, or you go to stable coins or anything like that, that falls within that bucket, I think. The only thing I think I would add, just to make sure people have the full view.
Awesome. Well, Jordan, I wanted to thank you for joining me to address these questions. And
Yeah.
for the audience, if you have questions or implementation support, reach out at O21Solutions.com, and check out Bitment and Trust Advisor CPA for your Bitcoin tax and accounting needs. So thank you very much.